Good morning. This is Tony Cherniawski, manager of the Practical Investor LLC. Today is May the 28th, 2010, and the title of our video is The Bears Are Back. This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. A purchase or a sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment you may consider. You cannot invest directly in an index. Well, good morning, and I'd like to just bring you up to date on what's been happening with the broadening top formation. Let's talk about the principle of the broadening top for a minute. I have an outline of one that we've had in prior videos, so let's go to that right now, and we will be able to just see where we stand with the broadening top formation. In principle, the broadening top would have three points in an upwardly sloping fashion and two lower points in a lower sloping formation, giving us the picture of a megaphone possibly or something along those lines. This is also known as the broadening, or excuse me, as the megaphone formation, or also known as the 5-point reversal, because each new point after one makes a new low or a new high. This is very confusing for a lot of people and tends to confuse the traders because of each successive break up or break down. And in addition to that, it leads to highly charged emotions by participants in the market. This is very crucial now because we're in a very emotionally charged market, and I just want to describe what's possibly going on here at this point. Let's go to the Dow now, and we can see the progress we've made. But let's first view the green broadening formation. And believe it or not, the green broadening formation went almost precisely to plan. And that is that it declined approximately 10% below the lower trend line once it broke it, and then reversed back up to retest the lower trend line from beneath. Right now, we have so far not pierced the red trend line of the red broadening top. However, that appears to be next, and let me explain why I believe that's correct. First of all, I'm not talking about Dow theory, I'm talking about cycles here for a moment. What we have is a bottom, which is part of the broadening formation on February the 5th. We also have the flash crash on May the 6th. Now, from a cycles point of view, you could say the flash crash on May the 6th did no technical damage. That might be correct by some people's standards, and I won't dispute that. However, the recent low that was made this week did break both the May 6th low and the February 5th low. That means that that's from a cyclical point of view, and possibly also from a Dow theory point of view, we now have a breakdown. And I just want to make that clear because there are so many people still looking up, saying, oh, we escaped the bullet, we ended up going and closing above the February 5th low, etc., and unfortunately missing the whole point, which is the lower low, regardless if it's at the close or intraday, is a very serious thing to happen to the market at this point. So while many people are looking higher, and in fact a few people are looking at a potential head and shoulders pattern here and expecting the Dow to go up to its January high at 10,729. I believe that this breakdown that we've just had this week tells us that that's probably not going to happen. As of now, from the May 12th high to the low that we had this week, the rebound that's been made, the bounce out of that low, has now recovered up almost 50%, which is a standard retracement rally. So at this point, there are no guarantees that the market can go any higher. In fact, there's a highly reliable indication that the market, in fact, is ready to go lower. Now, one of the things that I'd like to point out is the flash crash could have a repeat. Let's talk about the flash crash for a minute, because in approximately 20 minutes we saw the Dow go down over 800 points. And the thing that I want to point out here is they went and investigated it to say, are there any fat fingers? Who's to blame for this? And the fact was that, unfortunately, the computers, which are to blame, were not singled out. And because these so-called computers that high-frequency trade the markets are also supposed to be the very same liquidity providers that keep the markets liquid. And unfortunately, they failed to do their job on May the 6th. The thing that I want to point out here is that episode has now been totally ignored by most people. They think it was a fluke, an accident, unrepeatable. I'm receiving a lot of information from that. So here's what I'm finding. The bulls are saying, well, now that this is over and we escaped the bullet, by the way, this week because we didn't close under the February low, and on, that the market is bound to go higher now. And I see a lot of bullish sentiment here. Even the bears are saying, well, it's got to go back up. It's got to go higher. Again, if we look at the potential head and shoulders pattern, let's take a look at the chart again. They're claiming that we should see this go to 10,729, which is about almost another 500 points higher. So, you know, what is there to be wrong about this market right now? Well, the fact is, with this breakdown, the market can turn at any time. And that's the key that I want to point out to you right now. The market can turn at any time. It does not have to give you any warning. We could have a repeat episode of the flash crash. This is something that we need to take very seriously. So I'm giving fair warning here. The bears are back. We're in territory here that there's much more potential to the downside than the upside. You make your own conclusions on this. If you want to get more information, you may subscribe to my newsletter. I have a $50 special that will subscribe you through July the 15th. Please consider that. And at the same time, if you have reached your own conclusions, I hope that you do well with them. And by all means, do the right thing. And thank you very much. By the way, you can reach me at TonyC@thepracticalinvestor.com on my email, or go to my website, www.thepracticalinvestor.com, and there is a button to contact us. Thanks again. Hope you have a great Memorial Day, and I will be in touch after the holiday.